The conference call for Texas Instruments is underway right now. That stock is down a couple percent after hours right now. And joining us, John Vinh from KeyBanc Capital Markets. John, let's see, Q2 revenue for Texas Instruments came in above your estimate, as did gross margin. You expected the guide to be about as weak as it was, maybe even a little weaker. The stock is down here. What should investors do?
Yeah, I think long-term investors should stick with the name. I think what you're seeing here play through is, you've got a weak China market that's really kind of weighing on kind of expectations for kind of a second half rebound here. Guidance was flat in terms of revenues, which is 600 basis points below normal seasonal, and the commentary kind of suggests that everything with the exception of automotive is still pretty weak right now.
So what, if any, read-throughs are there? I've been thinking there aren't that many. I do think about Qualcomm, though, which hasn't been performing that well as a stock because people know that handsets are weak. They do have an automotive business, which is a growth area for them, which you might expect to go well. But what does this say about the state of demand for electronics overall, which TI tends to be a good bellwether for?
Yeah, I would say it's a pretty kind of muted kind of outlook for the broader analog group. You bring up Qualcomm, their automotive franchises is a very small percentage of their business, so it's really not going to move the needle for them in the near term. Long term, it could become more significant, and that continues obviously to be the standout sector within semis right now, also in addition to AI, which we've all been talking about. But right now, I think the broader semiconductor market is really still waiting for any signs of life in the China market, despite that country coming out of COVID protocol.
Yeah, why do you think it's been from a semiconductor and a supply chain demand story? Why do you think it has been so sluggish for this sector in China with the reopening?
I think their economy's struggling. I think a lot of consumption is really consumer driven, and China from a semiconductor consumption perspective accounts for 30% of global semiconductor demand. And consumer electronics is a big component of it. Consumer IoT, PCs, smartphones, these are all very consumer centric, end markets. And if the China consumer is not spending like we've seen in the rest of the world coming out of COVID, that's just going to kind of weigh on the broader base markets here.
So key question you have going into the earnings call, which I know it just kicked off a couple minutes ago, but what do you want to hear to remain convinced that this is a buy?
One, we want to see and hear about any sort of indications of China recovering and at what pace and what time frame China is going to recover. And then longer term, TI's strategy is, their inherent implicit advantage is they've got a manufacturing advantage with 300 millimeter manufacturing. Gross margins looks like it did miss street numbers. The guidance does imply that gross margins is a little bit weak. So potentially they've got a lot of that depreciation expense hitting the numbers here as they ramp capacity. But over the longer term, I think we want to hear that they still remain convicted that that's going to give them a competitive advantage versus their peers out there.